Hello, in this presentation we will work short calculation test questions that could be in the format of multiple choice questions or short answer questions, but in either case have some form of calculations or numbers involved within them. We will be working with recording normal business transactions using debits and credits. First question. Company receives $2,350 from a client billed in a previous month for services provided. Which of the following general journal entries will the company make to record this transaction? Note that this question is in the format of a multiple choice in the form of the term. What we need to be careful of here is not picking a multiple choice question that has the wrong formatting to it. So as we have just the stem here, that's actually beneficial many times, because what you want to do here is not just start looking at the answers to find the correct one, because they also all may look good in some ways, and that's the point of the multiple choice question. So what you first want to do is write down the journal entry, as we will do here, and then go look for the correct answer. So company receives $2,350. First question, is cash affected? I would always ask that as the first question. In this case, we're going to say it is. We received, we're assuming cash in the amount of $2,350. Cash is a debit balance asset account. Therefore, in order to make it go up, we will do the same thing to it, which is a debit of 2350. Then we know we're going to credit something. I'm going to represent the credits in a credit column as well as with brackets. And we need to know what that credit will be from clients billed in the previous month for services provided. So it says it was for something billed in the previous month. Therefore, we have to imagine that what happened on an accrual basis under the revenue recognition principle, that the previous month we did work, we invoiced the client and debited accounts receivable and credited revenue. If that is the case, then now we got paid off on that receivable that was on the books, and therefore need to reduce it, the credit then being to accounts receivable. So note the problem with this type of journal entry is we have to kind of be able to envision what happened last time, considering the accrual method, considering the wording that they gave us here, and that is that we did the work last month, and under an accrual method we assume the invoice went out, we assume there's an IOU in the account of accounts receivable, and therefore that is the account that then needs to go down. Next question. Company had the following accounts and balances as of December 31st, and then we need to calculate the net income. So this type of question could be given in different formats here. In this case, they gave us basically a trial balance representing debits and credits rather than just listing accounts in a plus and minus format. And our goal here to calculate net income is first to know that net income calculates as revenue minus expenses. If we're given a nice trial balance, then we also know that it's going to be in order: assets and then liabilities, then equity, then income and expenses. So the income and expense accounts then nicely and neatly are down here at the bottom of the trial balance, and we just need to calculate then the revenue minus the expenses. Seeing our data over here, we've got the revenue and the expenses. Note that the revenue are credit and expenses are debits. So I'm just going to take the 9300, that's the total revenue. We can subcategorize up the expenses here. 1460. If we were to add them up, it's going to be the 730 plus the 1460. These are the revenue, those are the expenses. Subtracting those out, 9,300 minus 2,190 gives us the net income of 7,110. Note, part of the problem with this kind of problem is that they gave you so much data that we might start to think that that's too easy. There's got to be something more to a question like that, and that's one of the kind of trickery that goes along with multiple choice questions. There are some that give you too much data, there are many that give you too little data, and we got to just work with those that we have. Next question. On April 30th, company had an accounts receivable balance of $26,800. During the month of May, total credits to accounts receivable were $61,600 from customer payments. The May 31st accounts receivable balance was $21,000. What was the amount of credit sales during May? So we're taking a look at accounts receivable. In order to answer this question, first we need an understanding of the receivable or sales cycle. That typically being for a company that does work before they get the money, meaning they do work, invoice the client, then receive money in the future. If we know that, then we know what's going to happen to the receivable account. What's going to happen is that we will invoice clients, receivable going up, and then we will get payments, receivable going down. We can think of that in aggregate as we are doing here. We're trying to see what the total aggregate beginning balance was plus what the activity was, and then the ending balance. What they're going to do here is kind of have us back into a certain number, which is a little unusual, but it's something we do especially when we do cash flow statements, as we will do at a later time. When doing something like this by hand, oftentimes the recommendation is a T account. So I'm going to put accounts receivable as the T accounts, AR for short. I'm going to format that cell just so it looks more like a T. Obviously, in real life, if we were doing this by hand, I should say, this is kind of real life. If we were doing this by hand, center across the selection. Just going to center this across that selection and then use some formatting. Then in a test question situation, then the T account is the natural way to go because you just write the T down. Actually, when you're in Excel, the T is a little bit more difficult to make it, and you might use some other format if you're working along with this in Excel. But we're kind of simulating if we were doing this by hand. We would say the debits on the left, credits on the right, and we're going to have on April had a balance. So it's going to have a balance then of a debit because we know that AR, accounts receivable, has a normal debit balance, it being an asset account, $26,800. During the month of May, total credits to accounts receivable were, I'm going to make the credits a negative for my purposes, $61,600. You don't have to do that. That's just what I'm used to. The May 31st account receivable balance was $21,000. So I'm going to put a line above that. That's what we need to figure out. So we need to figure that. I'm going to do it this way, a line above that. So in essence, we have this minus the credit, because credits makes receivables go down, and then something's going to happen to make this balance $21,000. So we're going to need a debit of some form here. We can write that equation algebraically. We could say, well, we got 26,800 minus the credits here of 61,600, and then we're going to say plus X, the unknown, that's what we need to put there, is going to be equal to the ending balance of 21,000. So if we do the math here, we're going to say that this equals the 26,800 minus 61,600. That plus X equals the 21,000. And then we're going to add this to both sides, 34,800. And 34,800, and add that. So doing the math, we're going to say the negative 34,800 plus the 34,800 is 0, plus X is equal to, and if we do the math here, we got the 21,000 plus the 34,800 gives us the 55,800, and therefore X then equals the 55,800. And if we plug that into our formula here, we can say that 55,800 goes there. If we then kind of sum up our debit and credit balances, we'll draw a line here and we'll sum these up. We've got debits of 26,800 and 55,800. Let's do that one more time. Giving us 82,600, and obviously the credit is just this number. So if we subtract that out, then the debits minus the credits will equal our 21, which is what we were looking for. Note that it's also useful to write this out in terms of a running balance. And so a running balance, if you're working in Excel, is always just going to be, and because I have the negative numbers, it's just going to be equal to this, and then we could say equals this number plus the sum of this would increase and this credit would decrease in this case. And there we have, so this is our balance here, this minus this, because the debits are going to win ultimately. Debits minus the credits gives us a credit balance here, but ultimately the debits will win. And if we do the same thing down here, if I pull this formula down, there's our running balance, taking the prior 34.8 plus the 55.8 gives us our ending balance of that 21,000, the matching here. So that's just another way to look at it. You can sum up the columns and then subtract them, which is probably the easiest thing to do when you are working something by hand with just a calculator. If you have Excel, the running balance is probably something that you're going to want to put together. You can also just try to think about what that number needs to be in terms of just reasoning it in your mind, saying, well, you know, this, and this have to somehow equal that, and try to think it out. But oftentimes it's useful and even faster just to write the equation out, say this minus this plus that's got to equal that, and then solve for the equation. I would then plug it back into the T account and just double check it and make sure that your math is correct. Next question. Company provided $250 of service and rented out its office to the same client for another $150. The client paid immediately. Record the journal entry. So we've got two pieces of this transaction. One being the service provided, that service of $250, earning revenue for the service, as well as the rental office, another form of revenue, for another $150. Remember that when looking at this question, if it was in the format of a multiple choice question, the difficulty may be that you're going to have different options, all of them looking somewhat good. So our goal here is not to go through the multiple choice, but just look at the stem here of if it were a multiple choice question, and just consider what the answer would be first, and get the journal entry. It shouldn't take too long to put the journal entry together, and then go to the options within the multiple choice question. So in this case, is cash affected? We're going to say yes, we received cash. So I'm going to say cash is increasing, and it's going to increase by the 250 plus the 150. We're going to have then revenue. Now, there could be one revenue account, but most likely they're going to break out the revenue into something like service revenue. And it might be called fees earned revenue. It might be called, you know, whatever they do revenue, but it'll be some type of revenue. They may even call it income, but it'll typically be something with the term revenue in it. And then we might have, the other one's probably going to be called rental revenue. And that's going to be the credit. I'm going to put the credits in there as negatives and 150 there. So then we can see that, of course, the total debits equal the total credits. Clearly, if you look at a multiple choice question, this answer will be there. They'll probably have every combination of this answer as well. So you want to basically write the thing down before you go searching out for the answers. Next question. Open store on January 1st of the current year. During January, the following transactions occurred and were recorded in the company's books. Cash balance at the end of the year is what we are looking for. Now, in order to make sure that we don't make any errors, it would be wise to put both the debit and the credit for each transaction, recording each transaction, and then posting the amount going to the cash T account in order to then figure out the ending balance in the T account. However, because this will probably be a test question, and because we're dealing with cash, which is more of an easier account, we're just going to basically list the T account and try to just list the portion of a journal entry, if any portion was dealing with cash in each individual journal entry within a T account, and then sum up the debits and credits and see what the ending balance is, hoping that we get it right, even though we're not using the double entry accounting system to check our work as well as we could because of the interest of time. So we're going to write down our T account over here. I'm going to say that we have cash in our T account, and we'll go ahead and put the underline there, and then we're going to put a line on the left side here. And in real life, or when you're doing this by hand, the T account would probably be easier to construct. If we're doing this in Excel, we might just put the two columns there and then run a running balance. But this is often something done by hand within a test format, so we're going to simulate that structure. So owner invests $14,700 cash into the business. Okay, so cash is going to be debited, because cash is a debit balance account, and we're going to make it go up because we're getting more into the business of 14.7. The credit would be going to the owner investment, the capital account. We will not be recording that, however, at this point. Then B says owner contributed $32,000 of equipment to the business. Now we don't. The $32,000 would increase equipment and it would increase the capital, but no cash is happening, no effect on the T account we are looking into at this time. 3 says, company paid $3,300 cash for an insurance policy. So cash is going out in this case. So I'm going to put that on the credit side. I'm going to represent the credit with a negative number. Just that's the way I'm used to doing it. You don't have to do it that way, but it might help if you're working within Excel too. I use credits as negative numbers or bracketed numbers. It could help by hand too, because it could make it easier for us to put this in one column if we're working with longer worksheets we need to put together. Next one we're going to have here 4. The company received $6,900 cash for services provided during January. So we got money, so cash is going up. So we're going to put the $6,900 here. The credit would be if they did the work in the same month. The credit would be to revenue. Next one, the company purchased $7,400 of equipment on account. So the keyword there, on account, means we debited equipment. We didn't credit cash, however. We bought it on account and therefore credited accounts payable. No effect on our T account. 6 then says the company provided $3,950 of services to customer on account. That means that we did work for customers, earning revenue, crediting revenue, but then not debiting cash because this time we have this on account again. That on account this time meaning accounts receivable rather than cash being received. 7. The company paid cash of $2,700 for monthly rent. That clearly says paid, so we're going to put that on the credit side. It's going to be a credit of $2,700. Next one says the company paid $4,300 on the office equipment purchased in transaction 5 above. Once again, it says paid, so we're going to have cash going out of the company. We paid $4,300. Credit paid $4,300 on the credit side. Last one, number 9, says paid $395 cash for January utilities. Once again, key term paid, meaning we're going to put that on the credit side of the cash T account. Credit of $395. Now, if we were doing this by hand, the easiest way is to to sum up the debits and sum up the credits and then subtract them. And the debits should be winning, it being a cash account. So I'm just going to add these up this way. We could do this in a calculator, but I'm going to say the 14.7 plus the 6,009 is going to give us 21.6. I'm going to go ahead and underline this here. If we do the same for the credits, I'm going to add up the credits. So the 3,300 plus the 2,700 plus the 4,300 plus the 395 gives us a credit of 10,695. That means that the credits minus the debits, this number 21.6 minus this number 10,695 is the 10,905. That then is the ending balance for January if we did all this correctly, which I believe we have. Note then that this is one way we can get this ending balance, and if you do everything by hand, this is what you get used to doing. But you can also have the running balance, and it's useful to know that. So if you wrote this in terms of a formula, you could, instead of a T account, you could just say obviously that we had the 14700 minus the 3300 plus the 6900 minus the 2700 minus the 4300 minus the 395. That same concept is applicable or doable with a running balance, which is just the beginning balance, when we would then take the prior balance plus what happened, and that's going to be, in this case, adding the debits, subtracting the credits. If you have credits in there as brackets, then it'll do that for you, and then that'll give us a running balance. So it's 14 minus the 3,300 gives us 11,400. If we take that down plus The 69 gives us 18.3 minus the 2007, 15.6 minus the 4003 gives us 11.3 minus the 395 gives us 10,905. That then matching what we got in this format as well. So just keep in mind that you could run this back with those two different formulas: T account format, running balance format, formula format. You could put this format obviously in a vertical calculation as well. The 14,700 minus the 3,300 plus the 6,900 minus the 2,700 minus the 4,300 minus the 395. You want to know what's best for you in order to calculate this on an exam. You also want to know how to do it multiple ways, so when you work with somebody else who does it differently, you'll be able to know what they're doing.